Yes, I know you are probably feeling anxious about NIO Stock because it has been trading sideways at between $40 to $60 zone, right? But to me, if anything, this is indeed the biggest buying opportunity you can ask for, and I'll tell you exactly why in this video after this intro. So if you actually remember the last time when NIO Stock was trading below $30, I made a video on why you should stick with NIO Stock at that price, and then I gave my full bullish argument on the major catalyst that would drive NIO Stock to $80. Well, NIO did soar to 52-week high to $67, but unfortunately $80 didn't quite happen thanks to two things: that are Citron short report and a threat of delisting in 2020 that pretty much made investors turn their funds away from NIO Stock. Now fast forward to 2021, I'm becoming more and more confident than ever that NIO Stock will hit $80 sooner or later in the upcoming month. And for that, let's dive right in and talk about why sticking with NIO Stock right now is a great idea, or rather, why you should consider buying NIO Stock if you have been thinking of taking a position in this. In other words, I'm giving you guys my full bullish thesis in 2021 from all my research in this video. Now, before we get into my full bullish thesis, let's backtrack a little bit first and look at some of the facts in order to make sense out of this, because I know a lot of you must be wondering, why is NIO Stock failing to rally despite having their best vehicle deliveries in January 2021? But before that, real quick, please hit the like button so that this video can reach to a brand new audience. It really makes a huge difference to my video and I will highly appreciate it. So if you actually remember, since last year in 2020, NIO has achieved a huge milestone, right? Deliveries jumped from 20,565 in 2019 to 43,728 vehicles in 2020. As of today, we have seen massive deliveries numbers of 7,225 vehicles in January 2021 alone, representing 352.1% year-over-year growth. So logically, that number should by far give more assurance to investors. But clearly that is not the case over here. After all, NIO Stock seems to be heading towards the opposite direction. And that comes down to two things. The first and the most obvious reason why NIO Stock is not rallying yet is because of the competition and of course the distraction from GameStop short squeeze. I mean, when you have stocks like Tesla, Li Auto, XPeng, Fisker, and a possible SPAC addition in Lucid Motor or the future, then it's gonna be a completely different game than it was before. And to back that up, looking at daily volume and the monthly volume over here, what we can see here is that the volume was trading at a monthly volume high of 5.3 billion in October. As the price and interest increases, then came into recent months since the middle of November, the volume has diminished and is close to bearish crossover as of today. So why does it matter? Well, that's because the trading volume reflects the overall activity of the market, specifically low volume of a stock, even if the stock is rising in price, can indicate a lack of conviction among investors. At the same time, high volume of a particular security can indicate that traders are placing their long-term confidence in the investment. In NIO's case, that's not what we want to see right now, but do not panic just yet because volume can always spike back up easily from good news ahead, which I will be talking about shortly. The second and the last reason why investors are not so keen right now is because of the fundamentals and valuation. Now we can argue all night about this, but analysts will always pinpoint down to one thing over and over again, that is the forward sales. See, back then when NIO was trading at $14, analysts were screaming at the top of their lungs calling investors to take profit because it was trading at 14 times sales. Now worse, at $60, we are looking at almost 47 times sales as compared to the legacy automaker like Ford, GM, or Toyota that trades at just under 0.7 times sales. Indeed, in this case, there's not much to say, but at the end of the day, we have to understand that this analyst's job is to analyze in terms of valuation, because essentially that's all they care about, not what the stock can be and will be. I think the failure to understand on how EV will completely phase out the traditional vehicle sooner than later are a massive big mistake on their end. I'm not trying to disregard them by saying that valuation will not matter, because the truth is it does, but I think that if this analyst can see the underlying technology of a company like NIO and their branding, it's really not difficult to see how NIO can transform themselves into a leader in this tight EV race. Now that we have got this out of the way, let's talk about why sticking with NIO Stock below $60 is a great idea. See, a couple of months ago, Citron Research claimed that NIO will lose a majority of their market share to Tesla Model Y, as Tesla Model Y will go on sales on the 1st of January. But if there's one thing we have learned in February, is that NIO brand appeal remains solid as reflected in the January delivery numbers, because although sales usually plunge from December to January, and that strongly speaks to the momentum underlying to the business today. After all, acquiring new customer is even harder and requires great financial resource to capture the market share in the EV industry, and in NIO we are seeing just that, as NIO's persistence and commitment have definitely paid off and resonated with many Chinese consumers. Now obviously this is not a deciding factor as to why I think NIO will hit $80. What really got me bullish about NIO is this. NIO announced that it will buy back 3.305% of its equity from their two strategic investors in NIO China for $850 million. Let me explain to you why this is important and hugely understated by many. See, a buyback occurs when the issuing company pays shareholders the market value per share and reabsorb that portion of its ownership that was previously distributed among public and private investors. In this case, NIO bought back 3.305% from their two strategic investors in NIO China. Sure, companies do buyback for various reasons, including company consolidation, equity value increase, and to look more financially attractive. But in the event for NIO, they genuinely felt that their shares are highly undervalued, as you can see from their official statement. It was stated that the reason behind why they continue to repurchase and increase its stake in NIO China is down to one thing, and that's their optimism about their growth potential. This means that as long as they continue to do what they are doing right now, why are you guys even thinking of selling? After all, I kinda agree that NIO has indeed become sort of a religion for its car owners, which really speaks a lot about them. Now, what got me even more bullish that will be the real deciding factor that I think many YouTube channels have failed to address so far lies in the mega size market in China. Let me show you the math. As of today, China remains the largest EV market with 2.3 million EVs in active use. To put that into perspective, that's nearly 50% of the global EV market, with Europe and US market trailing behind 1.2 million and 1.1 million EV respectively. According to research, EV sales in China are expected to grow by 40% this year to 1.8 million compared to 1.3 million the year before. If NIO can continue to grow in 2021 with an average of 3% as the production continues to ramp up from the 1.8 million Chinese EV market share throughout the year, that will give us close to 100,000 vehicles in 2021 in China alone. Of course, excluding the figures offered in Europe as early as the second half of 2021 and their future action plan to enter the US market. And don't forget that as the sales of NIO's EV continue to grow, its software as a service will also increase as well, which makes the business model very compelling. Clearly, NIO's growth story is nowhere near to slowing down, and that's the reason why I'm still bullish on this stock, because it's highly likely that NIO's momentum will continue to run. So the only sensible thing in my opinion is to stay and keep an eye on deliveries number. Alright, before I end my video, let me just show you a short clip on Cathie Wood's take on regarding NIO.
So we think that China might hold the secret as to the next big winners. We know that NIO, we do not own NIO, it's a battery swapping company, so instead of charging, they swap batteries. That is going to win the day.
Do understand that stocks don't go up in a straight line, and I think NIO's share could potentially fall much further if things don't go as planned under the one simple condition, that is trend in deliveries. At that point in time, then you should be seriously concerned. But at the meantime, I believe the best way of going around NIO stock is to stay calm and really trust the process. Well, that's all I have for this video. As always, please hit the thumbs up button so that this video can reach the brand new audience. Also, remember to subscribe for new future video if you want to learn and watch more on my elaborated stock research. Till next time.